Welcome, accounting students. My name is Steve Willis. Today we are looking at a tricky topic, control accounts. I was mystified by this when I was a student many years ago. In this quick video, I'm going to show you what it's all about. If you find this video helpful, don't be afraid to give it a like and subscribe to the channel so you get more videos like this. Let's get started. Let me tell you about my imaginary business. I sell one product and all of my sales are on credit. And let me introduce you to my first employee. His name is Sam. Sam has one job in my business. He records sales. And I have two customers. I have Mr. X and Mr. Y. So in the first month of business, Sam records two transactions. Mr. X buys $10 worth of imaginary goods. Mr. Y buys $20 worth of imaginary goods. So, friends, Sam is in charge of the sales day book, books of prime entry. Sam is not a chartered accountant. Sam does not know double entry. To save time, to make life easier for the accounting department, we record all categories of transaction in one place before we begin double entry. That is known as a day book, a book of prime entry. Sam is in charge of the sales day book. Let me introduce you to another employee in my imaginary business. His name is Carl, everybody. Carl is in charge of collecting cash receipts from our customers. All sales are on credit, and Carl has recorded that Mr. X has paid $9 to settle his account, and he took an early settlement discount to pay his balance in full. Mr. Y paid us $10 in the month, not paying the full amount he owes. So now Carl can summarize what's happening here. We know Mr. X, has sent in a total of 10, clearing his account. Mr. Y, 10. We could put a total over here. We know the total cash is 19. The total discounts is there. So Carl can tell us about this information. Carl is working another day book. This is called the cash book. And I am showing you a simplified version, the receipts only. But you can imagine there's also a payment side to this. So another day book, another book of prime entry, the cash book. Okay, let me now introduce you to the most important person in our finance department. And this, everybody, is Linda. Okay, let's meet Linda. Linda is our credit controller. Linda ensures our customers pay us on time. Our company runs on cash, not profits. So Linda, very important to make sure we have liquidity. Now, Linda gets the details from Sam and Carl. Linda knows the big picture. Linda knows our sales. Linda knows cash received. Linda knows the discounts we've allowed to our customers. So Linda knows the full picture. Linda knows Mr. X bought $10 of goods, paid $9 of cash. We allowed a $1 early settlement discount. Linda knows Mr. X has cleared his account. Mr. Y bought $20 of goods. He paid $10. Okay. So we know that Mr. Y owes us 10. We know our total 30, our total 19 here, a 1 discount, and a 10. So Linda understands the individual balances. Linda is in charge of the list of balances. Now, this is where I was extremely confused when I was doing my ACCA exams. And the questions can use different terms for Linda's work. Sometimes it's list of balances. Sometimes it's the individual ledgers. Sometimes it's the individual accounts. I've heard memoranda accounts. But it's one thing. It's the individual list of balances. Let us now meet Andy, the company accountant. We have not performed a debit or credit yet in the company's general ledger. That is now Andy's job. Andy is maintaining our receivables control account. What makes it a control account? Well, have a look at this. Andy will take the total from Sam's sales daybook, the 30. Okay, he can record that in his control account. Now, from Carl's work, he can take the cash received from our customers and the discounts that we allowed to our customers. Andy can then arrive at a closing balance for us, a carry forward balance of 10. Control account, we are taking totals from different locations and combining them into one T account, okay, as a check. Now, look at this. If everything has been done correctly, Andy and Linda will have balances, okay, that match. Andy's balance is matching Linda's list of balances. This is now where it gets tricky with control account reconciliations. Remember this, Andy takes the totals from the daybook. Linda takes the details. So if we see in our question the word casting error, that means the addition was done incorrectly. That means 10 plus 20 equals 35, okay? So that would be a 35 into the trade receivables control account. If we see a casting error, it's Andy who has the mistake in his work. Now, if the question makes reference to an error in the list of balances or the individual accounts or the total of the list of balances was done incorrectly, then it's Linda's work who is who is wrong, who has the mistake. And finally, if they tell us that an original transaction was recorded incorrectly or omitted, if Sam accidentally called that a 01, then the total would be wrong and Linda's work would be wrong. So there would be an error, but the closing balances of Andy and Linda are balancing. Friends, there you go. That is a very quick look at control accounts. Now, please go back to whatever textbook you are using to learn this. Please reread it and see if it makes a little bit more sense. This is Steve signing out. If you're enjoying these videos, feel free to subscribe and give this a like. Bye for now.